So I think we have to put Korea into context. So it's been a massive outperformer on a year-to-date basis, but it's important to baseline that correctly. That's coming off of an incredibly depressed level and almost zero foreign shareholding as we exited last year because of the political uncertainty in the market. And so that 35% run in the market is off of a very, very, very low baseline. So we do think we're back at more normalized levels here. And so the absolute correct question is, where do we go from here and what are the drivers? We do see the change in corporate culture and overall corporate policy in Korea as a critical driver of the market. The million-dollar question that we get back from investors is it real this time? The Korea discount has existed for the entirety of my career, which is unfortunately a very long time for me. But we do believe that this is real, and we do start to see actions taken by corporate management teams to start to address that. And so we do think the potential for a valuation re-rating is pertinent for investors.
And you had a brilliant call on South Korea's shipbuilders quite a few months ago as well. Give us some sector picks. I mean, when we're talking about corporate value up, in the initial stage where we're talking about sectors like banks, is that holding up in your view?
It is, and one of the nice things about Korea and a number of markets around Asia right now is you have big number, small number trades. And what I mean by that is shipbuilders are a great example. So if I look at global shipbuilding, China is 70% of overall shipbuilding, and then effectively Korea and Japan split the rest. As you start to segue some of those China orders into Korea and Japan, it's a very large market into limited market share, which implies very, very significant upside on a percentage change basis. And we have a number of those trades going on around the region. In Korea specifically, we've had shipbuilding, we've had the defense industry stocks performing extremely well. We do think that that will continue through the rest of this year and into next. And we do see overall economic growth starting to pick up, which is very favorable for the financial stocks.
You know, Sully, for South Korea, it's a value up trade, right? Japan corporate governance reform is in Korea. Is there an equivalent of, let's say, in Japan? I mean, the reason a lot of activists, foreign activists, are focused on Japan is they see potential value that could be unlocked, right? Because a lot of these companies, you know, it could be a utility, right? But they just happen to have a huge land bank, right? And which hasn't been marked to market yet. What is the equivalent for Korean corporates? Is there one?
There still are significant cross shareholdings, and there still are bits of businesses that are severely undervalued on balance sheets. My favorite game in both Japan and Korea is find the sports team on the balance sheet, and you'll generally find one in most major conglomerates, which gets quite fun, particularly on the baseball and soccer side. Okay. But outside of that, there are significant opportunities to unlock corporate value purely through financial engineering, which has a bad reputation, but financial engineering in the business school case study perspective, where you are actually unlocking undervalued assets that are currently buried somewhere on the balance sheet.
And India is one of your overweight markets right now, right? Despite the overhang of tariffs, despite the fact the valuations are hard, despite the fact that earnings growth is slowing. Why?
So if we go back to the top of the conversation, ultimately it's about domestic demand across large economies in Asia. And India is a very good example of that. I also think India is a fantastic example of one of the most important conversations that we're having across Asian markets right now, which is a structural change in the dynamics of how these markets trade. And if you look at the domestic capital formation story in India and the rise of retail investors pouring money into the stock market directly or into institutional money managers in India, that is an incremental driver of the market, is an incredibly important part of that story. Cherry was sort of dinging me for how long I've been doing this earlier in the program, but if you go back to the late 90s and the Asian financial crisis and Mahathir's comment about foreign investors and fast money, et cetera, that's not part of the emerging Asia conversation anymore because you have such a fantastic domestic capital formation story in India, in Korea, in Japan, and that's a very significant change.
But what does it say, though, that you know, foreign money's been bailing from the Indian market?
So if you look at India from a headline perspective, it looks very expensive. If you look at it in terms of the changing dynamics of the trading nature of the market, which is why I'm highlighting it, that's a really important part of the story. I think in general, it's easy to get hung up on valuations. My issue with that conversation is twofold. Number one, we know what the valuation is. That's public information. So that's not a new data point. Buying Korea historically because it was cheap was not a successful strategy. Selling India because it was expensive was not a successful strategy because it's public information. The question is, why is it that expensive and what is the forward from here? If it's expensive because you have a significant new participant in the market, ultimately shares go up because there's more buyers than sellers, right? And that's been a critical dynamic to the Indian market. The question then moving forward is, what is the longer-term economic growth profile of this country? And what does that look like relative to other alternatives? And that's a really important part of the story. India is the only major market that we've got in global emerging markets that's going to offer you high single-digit GDP growth and significant earnings growth on an extended period of time. And so the rarity of that arguably earns a valuation premium.
All right, so this is sort of another way of saying that the so-called conglomerate premium, which India has been enjoying for I don't know how long now, that still holds.
Yeah, and again, it's the changing nature of the market, both from a growth perspective, but also in terms of the market participants, and that's a really important part of the story.
We've talked about this before. Defense names there are looking good.
Yeah, and look, on a global basis, defense was one of the easier sectors to call. I think the critical conversation in the defense space, there's a couple of angles to it. Number one, you're obviously seeing a massive increase. We talked earlier in the program, big numbers to small numbers, right? You're seeing a significant percentage increase in defense spend as a percentage of GDP. And if I go from 2 to 3%, that doesn't sound like a big increase, but it's a percent of GDP, right? Yeah. So big number, small number issue. Yeah. And the math of that is very compelling in terms of the total addressable market for defense spending moving forward around the world, not just in India. You're seeing very strong performance out of Japan, Korea, China, European names in particular. The other dynamic to that, again, market participants and the makeup of incremental buyers is very important. And if you look at buyers of defense stocks, what we've seen is a really interesting shift. A lot of institutional investors were locked out of buying defense stocks because of ESG restrictions. And there's two things that have occurred. One, ESG restrictions are less relevant to some investors than they were 2 years ago. Number two, we've recognized that defense is also about defense, not just offense, and allowing corporations the capital required to build up manufacturing capacity to have goods that countries like Ukraine can use to defend themselves is an important part of the story. It's not just about offensive weapons. And so you've seen a very significant shift in terms of the number of buyers of defense stocks as a result of those two dynamics.
So who's buying made in India weaponry then? Is it Ukraine?
You're seeing buyers across the board. And again, the interesting thing from an Asia perspective, if I look at the region as a whole, different buyers for different areas. And Korea in particular is an interesting country to look at from a defense spend perspective because it's one of the only Asian markets that can sell into NATO as an example. So really doing the company specific work has been a real important part of the return story here.